You're watching Cybersecurity Inside, a videocast where you can discover what you need to know about cybersecurity. Here are your hosts, Tom Garrison and Camille Morehart.
Our guest today on the podcast is Malcolm Harkins. He has over 30 years of experience in the tech industry, most of it focused on security. As announced at Black Hat, Malcolm is now the Chief Security and Trust Officer at Epiphany Systems. He currently sits on the board of the Cyber Risk Alliance as well as TrustMap. He's also an advisor to several security startups. He was previously the Chief Security and Trust Officer at Cylance and the VP and Chief Security and Privacy Officer at Intel. He's the host of a Security Speaks podcast focused on having real and raw cyber risk dialogue with practitioners. And as those of you who watch our podcast, he is a return guest to our podcast. So welcome back, Malcolm.
Hey, thanks, Tom. Happy to be here.
Return guest, but I don't think we've had you on video, right?
No, first time on video, so we'll see how we do.
Our topic today focuses around cybersecurity insurance. It's one of those areas that gets talked about, and I don't think a lot of people, myself included, are really deep on the topic. So I'd love to maybe just start with a little bit of a background at the high level. What is the idea behind cyber insurance?
Like any insurance, whether it be automobile, health, property and casualty insurance, business interruption insurance, there are, real issues that we've all been experiencing in cyber. For organizations, they've had financial impact. An insurance policy is a way to, in essence, pay premiums to mitigate some of the potential financial impact of either a business interruption, a lawsuit, or expenditures related to responding to a cyber event.
The basics are whatever cost you incur as a result of the cyber attack, you would have insurance against. Just like your house burns down, you have house fire insurance. But what are the kind of expenses that typically are covered in cyber insurance?
There's a wide variety of them. So in some cases, the upsurge and increase we've seen of ransomware, in some cases, it would be the equivalent of business interruption insurance. So what downtime and financial implications, because maybe your point of sale systems were ransomed and your revenue was interrupted. There might be insurance clauses related to covering perhaps the ransomware payment. There would be clauses if you had a privacy breach related to any lawsuits or the cost and expenditures for credit coverage and media and those type of things to let your customers know that you didn't handle their data in a way that protected it. So there's a variety of different clauses with a lot of different conditions that are generally in some of these policies depending upon what you're trying to insure against.
Is this something that is generally larger companies all have these policies, or is this still kind of a nascent or, only some companies have it?
I would imagine the smaller organizations probably don't. But if you were certainly mid-sized and above, there's a decent probability you do. Now, when you get into very large enterprises, even, when I was at Intel, like many organizations that sit on billions of dollars in cash, there's a level of self-insurance. You still mitigate with insurance policies for some things, but, companies that have large market caps and they're sitting on tens of billions of dollars of cash tend to do some level of self-insurance and use that as a mitigation. It's probably, I would say at least 30, maybe 50% have some type of what I'd say cybersecurity insurance clause. Now, how much of that would cover ransomware or data breach versus disaster recovery issue, right? I had a fire in my data center and that affected my operation. So there's a mixture of when you widen it out to cyber insurance. Because even back in the day when I was in Intel IT 20 plus years ago, coming in to run security and business continuity, there was stuff that I was working with the enterprise risk team who did Intel's insurance coverage. And it was on traditional business continuity, disaster recovery related to systems. And that's obviously evolved since then.
We all are familiar with the automobile insurance or home insurance, those kinds of things. And those insurance companies do play a role in terms of what they require. In order for you to have insurance, you meet certain requirements. Does that sort of thing exist now? And if not, what areas do you think are likely areas that the insurance company is likely going to stipulate in the future?
Yeah, so if you, again, doing a little bit of a historical perspective, so you go back 10, 15 years ago, I even spoke at a Lloyd's of London Cyber 360 event in San Francisco. It had been, I don't know, 2008 or something like that. And literally during those time periods, it was even truly the wild, wild west, because people didn't know how to estimate it. The rates were there. They had all these clauses. There's still a little bit of wild, wild west, but it's still getting dialed in. But there's a lot of exemptions and clauses in there. Like if you didn't patch a system, if you didn't have appropriate identity and access management, if your antivirus wasn't up to date, that it starts reducing the coverage, or there are exclusion clauses that would mean you don't get covered, because the way in which an insurance company makes money is to collect premiums and pay out as little as possible. Got to look at it from, are you doing what is in the terms of the contract of the coverage? And if you are, then generally they'll pay out. But there's also been a number of lawsuits back and forth between those who didn't get covered and then sued their insurance company saying, hey, where's my money?
Some insurance policies actually cover payout of ransomware. So is there kind of a mutual evolution of, oh, well, then let's increase that ask, because companies that might otherwise have gone out of business if we made the ask now have insurance coverage?
There are cases where the insurance companies have, in essence, been the response coach to certain events, where somebody has a cyber insurance premium, they've got a connection with the law firm, and the insurance company helps coordinate how they're going to respond to things. Because again, the insurance company might actually want that control in order to minimize missteps, in order to minimize payout. And that's useful not only for a company that might be lacking in maturity from having similar events in the past and they don't know how to deal with it, but it's also useful for the insurance company to help guide their customer on the appropriate actions to take and when to take them.
Isn't this a little bit weird, though? I mean, I would think the police maybe would be involved, but negotiating with a criminal, you now bring in an insurance company as opposed to FBI or something.
I would venture to say 99.99999% of all what I'll say system compromises, because breach is a legal term that generally has a implication for privacy, but I'll say compromises of systems in organizations never get reported, and then very rarely get reported to law enforcement, for the simple fact that in one case, it might not be material in terms of the impact. It just might be a nuisance. So it'd be like reporting graffiti. And you might not always do that because it's a nuisance. But even if it is material or potentially material, a company might want to maintain control over the investigation in order to limit their liability and stay in control of the investigation versus have law enforcement come in with an unknown set of motivations and start doing things or seizing systems or collecting evidence that could disrupt the business. So it's different than a physical crime. And I don't know, though there has been some proposals around mandatory reporting, including some stuff that's come out recently, more for the federal government and critical infrastructure. So there's a gray area as to whether or not you have an obligation to report, other than truly in the privacy space, or if you're a public company, it's material or significant to your investors.
You bring up several interesting points there, but I think one of them, at least we can explore for a second, is the idea of not wanting to report, not because of nuisance necessarily, but because it seems to me like the of paramount importance to the company is A, the company's reputation, but also B, wanting to make sure they understood what actually broke so that it allowed the attack to even happen in the first place. And you don't want that to be publicized in any way until you are certain you got that issue resolved. And that may be at odds with maybe law enforcement wants to come in right away and maybe not be so much into the let's watch and see what the bad guys are doing to understand how this attack actually worked.
In some cases that would occur, but again, it gets back to, again, who to report to. Local law enforcement in most communities, they might have somebody who can do technical forensics to help in a physical crime look at stuff, but they probably are not equipped to respond to a logical event. And then the question just becomes, okay, well, where did it originate from? Where did the impact happen? And as we know, law enforcement is regionally based, right? And so do you report it where your corporate headquarters is, or do you report it where the impact is, right? So you have those type of dynamics. And the, let's say, watch and wait and learn is, there's probably some aspects of the FBI and stuff that would do that, but more likely that would be something an intelligence agency would be more likely to want to learn, particularly if it was a nation state actor versus just organized crime.
And then you also mentioned that the vast majority, I think you said 99 and a lot of nines after the decimal point, don't get reported. Can you speak a little bit more about that, like the motivations for not reporting?
Scaring shareholders, alerting your customers to something too early or premature. It could be, again, timing perspective. You might be having a big product announcement or announcing an amazing quarter from a revenue perspective. And so, there's all these sort of motivations within an organization that you're trying to protect the brand, you're trying to protect your shareholders, you're trying to protect your bottom line. If you look at it, privacy breaches have a specific legal requirement and legal definition. Intellectual property theft, I would venture to say there's a lot of companies that have had a lot of intellectual property that, even if it wasn't demonstrably seen that it was exfiltrated and stolen, but those systems were seen and touched by a bad actor, which might mean your intellectual property is compromised or a trade secret is compromised. But you would start doing the wiggle room, perhaps, with attorneys to say, well, do we know that they actually got it? So you'd have to prove the negative that they didn't before the legal team would allow you to report it. Those are all the barriers in place, which is why you very rarely, other than a privacy breach or a ransomware attack that's already obvious to the public, see an organization come out and say, my systems were breached and data was stolen. Doesn't meet a clean legal definition, and you can play with the optics of materiality. An organization will do that and not report.
To pay or not to pay, that is not the question. The question is, what impact is this going to have? And is it preferable for me not to report it, potentially, especially if I have insurance covering it?
In some cases, it might be preferable. I'll go back to my Intel days, public knowledge. So I'm not saying anything that's not out already in the public domain. When Google came out and mentioned the Aurora breach was in January, February of 2010. That attack started in 2009. Google went public with it. Intel was, to this day, I still think, the first company that appropriately reported it in our financial filings, 10K or 10Q or something like that. And we described at a general level that an attack had occurred. And we, had appropriately ascertained that we thought we had an obligation to report under Sarbanes-Oxley because of the potential materiality impact, and we were a public company. When I went to RSA that year, a few weeks later after that, half of my peers in the industry in the Fortune 500 were not happy with me that Intel had done that. The other half said that's absolutely the appropriate way to do it. So even 10, 11 years ago, that was how the calibration was in terms of whether or not Intel had done the right thing. I believed we'd done the right thing. I know Paul Odolini, who was CEO at the time, believed it. And I still think we have that type of what's appropriate, what's not appropriate to report. And the SEC and stuff has provided additional guidance around it. But I still think too many organizations are optically playing with the lens of risk in order to not report when they probably should be reporting to their shareholders the potential implications.
Do you think that it is likely, some of the things that are likely going to come from more prevalent coverage by insurance as we move forward, that there are going to be changes in terms of what they mandate. Like, for example, you'd mentioned before that they have rigorous processes to update their platforms, and they do it in a timely fashion, right? That will be something that needs to be in place in order for you to be covered by insurance. Is that the kind of thing? Are there others that are like that?
In some cases, there's tools that the insurance carrier will want you to run. They'll want to see a penetration test. They'll want some routine updates, in essence, on the health of cyber. Now, on the one hand, you could say that that's going to raise the bar, when in some cases it probably has. There's been some articles recently, back a few weeks ago, one in SE Media, that said there was scant evidence that the cybersecurity insurance marketplace has had a positive effect or raised the bar on security. And I think that's probably just because of where we're at in the life cycle of insurance companies, in essence, mandating or making those requirements of organizations. But I think we're going to see more and more of that.
I think this insurance thing is an interesting topic because it begs the question, and a different industry. So let me change the subject. It's still insurance related, but it's different than cyber. And it has to do with things like pet insurance. So for those of us older school, that had dogs when we were growing up, when we brought the dog to the vet, for the most part, it didn't cost that much. I mean, I'm saying figuratively, not fair, relatively speaking, it wasn't that expensive. You spent, $50, $100, whatever. Now, people have pet insurance. I'm like passing out when I see how much it costs some people to have their dog go to the vet, and it's hundreds, in some cases, thousands of dollars that are being paid. I just wonder if there's a dynamic that's existed in other industries that we might be on the forefront for, as well as actually inadvertently sort of driving cost up as a result of insurance.
It's an interesting thing. On the one hand, again, insurance companies there to make money. Most people have always heard me say the cybersecurity industry profits from the insecurity of computing. So the more risk that occurs, the security industry revenue goes at a macroeconomic level. I think the potential danger, putting on my hat, is looking at some of the security players who have dated, aged architectures and approaches to control, and their connection with the insurance industry to promote using that dated architecture and then insuring away the potential financial implications. That is probably the biggest risk that we have for adding cost and adding risk. And those two players would profit while shareholders, stakeholders, and customers would suffer.
So staying more nimble, working with insurance companies and security officers to understand what to do to protect as best you can would probably be your advice.
Yeah, it would be. And I think the other thing that's a trap that we've been stuck in for a couple decades is the way in which we look at risk. Risk, the way in which we've been doing it for at least as long as I've been in this industry, a couple decades and probably longer, is risk is a function of three things: threat, vulnerability, and consequence. And that combination is what drives the risk equation. But the thing that is absolutely true is being vulnerable doesn't mean you're exploitable. There's a difference between initial compromise to catastrophe. And that is the attack path. That is the exploits through the daisy chain of connected devices, identities, and systems in your environment. And what we need to be able to start doing is start focusing on where we're exploitable and not just where we're vulnerable. That will allow us to turn the dial on risk more efficiently as well as more effectively. And that, if I was doing it and I was in a larger company and cyber insurance, I would focus everything on, yeah, we might have these things and there might be some level of vanilla, broad-based vulnerability. But if I can demonstrate the exploitability is low, then it shouldn't matter.
So you're talking about it would be really hard for somebody to take advantage of this vulnerability. But what about, I don't think you've addressed like redundant compute or redundant or other alternative systems, or some, like if somebody compromises any one of my systems, I have a second kidney. How do you look at that kind of an approach?
Yeah, well, I mean, we obviously need redundant systems for just resiliency in our environments for everything from fire, flood, an internet outage, whatever the case may be. But it depends upon the risk issue, right? If I'm worried about a compromise and data theft, a redundant system doesn't stop data theft. It just provides redundancy to that system not being available. So it's an availability risk issue.
Increases your risk.
Yeah, exactly.
Now you have two systems holding the data.
So you have to think about all these dynamics. Where do I need redundancy? Where do I have single points of failure? Where do I have single points of compromise? And how do those things connect along an attack path to the fulcrum point of a system compromise leading to, the equivalent of a colonial pipeline or a solar winds, right? So you have to look at it, or an Equifax breach, right? That was an Apache Struts vulnerability on an external facing website that led to one of the biggest data breaches in the US.
Do you think insurance is going to help with that?
I think they will help push some level of hygiene and corrective action at the broad level. I think unless the insurance industry starts moving towards, we want to look at where you're exploitable, not where you might be vulnerable and have a system compromise, but where that fulcrum point of risk is, the exploitability. Because again, the attack paths are these daisy chains of all these things. So one system, one irrelevant user clicking on a link and saying that was the thing that caused the colonial pipeline to happen, a breached password without MFA. No, there's this daisy chain of all these things that occurred. Where did that happen that then led to a massive ransomware attack? There's a lot of connective tissue, and without understanding that connective tissue and that exploit path, you're going to be focused on the wrong thing. You're going to say, I'm going to patch all these things, I'm going to do all these things, and you're still going to have a connection and a pivot point because you can't eliminate risk. So how do I break and reduce as many attack paths as possible? That's the way to manage risk.
There's sort of good hygiene that you're describing that every company should be doing today already. There's nothing really unique. I guess my question would be, with the addition now of cyber insurance, you have insurance companies that are absolutely not wanting to have big payouts. Do we think that there's an opportunity, or likely, we know there's an opportunity, but do you think there's likely that you're going to have people that are very, very deep on what is risk and identifying those critical elements because it's their business, they're in the insurance business, and that crawl through their potential customers when setting premiums and actually raise the bar for a company that before they thought they were doing good due diligence, but they just really weren't, to the same level as the insurance company who's got big money riding on the insurance. Do you think that's the case? Or do you think companies are already heavily incentivized, they're doing it?
Well, broadly, I don't think most companies are incentivized to do a lot, which is why we're continuing to have the issues. And people they're moving slower on innovation in this space than we should. I do think there are aspects of the insurance industry that will occur, and they will be that precise because the payout, the premium, the implications of it are so significant. They want to make sure that things are done right. The challenge in the cyberspace and in the technology space in general, it's different than insuring my building from an earthquake or a fire, because that's a more static environment. Just like in even those events, there's the force majeure. If a terrorist attack happens, insurance backs off in some cases and says, hey, we're not insuring that. If a nation state attacked and dropped a bomb, I'm sorry. And so there's also this nuance that even in the United States, where there's been some suggestion in the prioritization of ransomware attacks to be investigated with the priority like terrorism, that now there's some potential worry that insurance companies, if it is done that way and seen to be orchestrated by a terrorist group or a nation state, that they'll use that clause and say, hey, there's a clause here that says, hey, this type of actor we're not insuring against.
I think it was ZDNet. They claimed the first ransomware attack actually occurred in 1989, and that it froze up a system, and then you got a message on your screen that says, here's a P.O. box number, and you have to send a check to Panama to a P.O. box. And then, kind of gave this list of, over the decades, what's happened till today, where you can look across just sort of Google it, and any kind of news outlet that tracks it will tell you ransomware attacks have increased significantly in the last few years. And I'm wondering if they started before 1990. I can imagine something like cryptocurrency made it easier than a P.O. box cashier's check, but what else is it that's making that grow so fast?
I think you're right, and I'm sure it did occur back in the 80s, or heck, even probably back in the mainframe days, right? Because if somebody found a way to make money, they would actually try and use it. But I think what's accelerated it is a few things. One, the ability to get away with it because of Bitcoin, the lack of traceability is there. The fact that we've had the urban sprawl of IT that hasn't been well protected. The fact that you could go rent and basically buy a ransomware attack on the dark web and go after somebody and make money with it. So there's crimeware as a service has emerged, in essence, over the past several years. But the other thing that we should think about, the ransomware attacks that we're seeing today, while they're impactful and troublesome in many ways, they're not necessarily my primary worry. I would worry to some extent, particularly depending upon the company I work for, digital extortion. It's a different type of ransomware. I have access to your HR legal database, and I know who was accused of harassment or hostilities. I know who was accused of discrimination. I know when the company paid out in a gray area to protect an executive. That type of data would potentially have more brand damage and shareholder implication than a leak of intellectual property, particularly if it was related to a key executive or some behaviors within an organization that would be somehow embarrassing. And I think people need to start thinking about digital extortion well beyond just the typical, I'm locking up your system.
And you mentioned ransomware as a service or cybercrime as a service as something that has kind of evolved over the last, within the last decade. Would that be fair? Can you say more about what that is and what we should be on the lookout for when it comes to that?
So there are some studies that publish the price of renting a hack on a mobile phone, a hack on a device, buying an identity, or in some cases, a distributed denial of service attack against somebody's corporate domain or organization. Those have been going on. I mean, again, I've been in this space for 20 years. That stuff was starting to occur 20 plus years ago. And really kind of crimeware as a service started being thrown about as a term when I was back at Intel. So again, circa 2006, 7. But I do think we've seen the acceleration of it, because if you can make money off of it, get away with it, and then allow other actors to basically buy a attack service, you're not the attacker, you're just providing some capability. So there might be some things, depending upon the country of origin who's selling certain things, that it's legal. And then the buyer who's weaponizing it, going against the folks, depending upon where they're at, it also might be legal. So you have this weird geopolitical nation state location. Where did the attack occur? What infrastructure was it used? As well as some of the attacks are leveraging other victims, right?
The idea of just security in general, attack, the business of attacking, I think is sort of a fascinating follow-on topic. We probably can't get into it today, but I think the role of insurers in this marketplace is going to be interesting to see how it plays out. There's certainly, I think, probably more benefit than downside to it, but I can see for sure that especially as you have nation states, very well-funded, amazing capabilities, the insurers do not want to pay out. In order for their business to stay viable, they're going to have to require, I think, a lot of due diligence from companies to get a policy.
But, if we look historically, the insurance industry has done a lot on building standards and safety and fire prevention, improving car safety standards. So I think if we look historically broadly on the physical side, there's evidence that the insurance industry has made a tremendous amount of impact on improving safety on things. So I'm hopeful that that will occur and be really what the outcome of the insurance industry's engagement is in this area.
Malcolm, with that, we will bid you adieu, but thank you so much for coming in, sharing your background. Congratulations again on your new role. It's exciting stuff. We look forward to talking to you again in the future.
Thanks for joining us for Cybersecurity Inside. You can follow us here on YouTube or wherever you get your audio podcasts.
The views and opinions expressed are those of the guests and author and do not necessarily reflect the official policy or position of Intel Corporation.